It's time to discuss some burning economic issues from GDP growth, exchange rate, inflation trends. Joining us now to unpack this, we have Mr. Bismarck Rouhani, as the MD, CEO of Financial Derivatives Company. And he's not joining us via Zoom. He's right here with me in the studio. It's great to have you, sir, this second half. You and I in the studio. This is the first one for the second half, I believe.
I know.
At this point.
Yeah.
So, Mr. Rouhani, before we get into the other conversation, we got the announcement of planned power outage, from the TCN that's in Lagos and parts of Ogun State.
Yes.
And definitely, I don't know, in my mind, that seems like a problem.
It is a problem.
For businesses.
Yeah.
At this point, help us count the cost of what this outage means.
Okay, first of all, there's the opportunity cost and there's the cost. The cost is that it's going to, Lagos and Ogun maybe constitutes about almost 30% of Nigeria's GDP, right? And so if you're going to have 1 month of downtime, then the impact is that you would have 1/12 of 30%, which is significant in terms of GDP. But the question is that if you do not do it, if not now, when? You've got to do it sometime. But these are kind of band-aids. The problem of power in Nigeria is fundamental. It ranges from what you call cost-reflective tariffs to forbearance of the debt. I think the Gencos went to see the president and said there's 3 trillion Naira of debt, and the president said, oh, I'm going to look at it, right? And finally, investment in the sector. You just had Transcorp Power, right? Now, this, you cannot grow this economy at rates higher than what we are seeing today without a broad power solution. So, yes, you can cover the potholes, but what you need is a complete restructuring of the road structure. Nigeria needs to accept that at 1,000 kilowatts per head, right? No, 100 kilowatts per head. For Nigerians, it's just like having all of us holding a candle, rather than, while in South Africa, they're doing 5,000 kilowatts per head. And yet, they have a crisis. So, there is a power crisis in Nigeria. It has to be resolved. There's no question of, you can't put a band-aid over it. It has to be done, and it has to be done now. Right.
Because I spoke to a bread maker, recently, and he did talk about a lot of stability that's come to their, business, from 2024 into 2025. When it comes to wheat importation and all of that,
yes,
they're seeing some stability. But he also complained that all of that has been eroded because of the cost of power.
Yes. You see, if you take a bakery, and that's what you're talking about,
right,
20 to 25% of the cost of a bakery is the power. Because when you put together your dough and everything, once you put it into the oven, you can't stop and start again. So they're not going to take any risk. They're going to be running fully on generator from when the dough goes in to when it comes out. So you have things like yeast, you have things like flour, you have things like baking powder, you have fortifiers and all of that. That gives you but power is about 20 to 25%. And if the price of diesel, which is at 1,050 Naira per liter right now, is one, so you really need that. Without that, there's nothing we can do. And so it takes us into the main discussion today, which is that of GDP.
Yeah, we're looking at GDP with the rebased numbers and an outlook,
yes,
at this point for what's to come in 2025.
The GDP is now averagely, let's say, about $245 billion. It's up. It grew by 3.13% in the first quarter. Well, what's the implication of this? First and foremost, we saw that manufacturing shares come down. We saw that agric has gone up marginally. And that the service sector, which does not employ too many people, is the main driver of this economy. So we need to accept, one, that Nigeria is the 4th largest economy in Africa. Nigeria is the 40th largest economy in the world. We want to be 20. And that the goal of having $1 trillion by 2030 is becoming much more difficult. It's more of a mirage than a reality.
That's a huge jump,
yes,
from
because
240-something.
Now you are growing at 3% now. For you to achieve the $1 trillion, you need to grow at 15%, 5 times more than what you are doing today.
15%.
So, and that's not going to happen. That's not. I'm a realist. But some things can be done. You clearly can go from 3 to 5 to 7% growth if you do certain things, and those things are clear. So, if you look at Nigeria versus its peers.
Right.
Look at that. The red line there is
Ghana.
Ghana, right? And look at Nigeria, the green line there, and South Africa there. But what is interesting, though, is that the GDP per head, right? In South Africa is $5,000 per head. Nigeria is slightly about $1,000 per head. And so, South Africa is a struggling economy. But to reflect on it, Nigeria and Singapore used to have the same GDP per head in 1960. Guess what? Singapore's income per head today is about $90,000. Nigeria is $1,000. So Singapore is 90 times higher than that of Nigeria, even though we started at the same time. So there are some things that we are doing that are wrong.
Does the GDP per head, does it reflect on living standards?
It is the best measure of living standards, but you're assuming that all of us, that is you, I, Ikeja Electric, Dangote, and all of us, are sharing the income equally. The truth is that
$1,000 each.
$1,000 each, but that's not how it is.
No, that's not.
It is distributed unevenly.
Right.
So they say, according to the Bible, unto him who has much
more is given.
Unto him who has none, even the little he has
is taken from
away. So, and that's the capitalist mantra. Generating income is one thing, distributing income is the other, and feeling the impact across. So, and that's every time there's been a revolution in the world, agrarian revolution, industrial revolution, digital revolution, AI revolution, what has happened is GDP has grown sharply, but distribution inequality has increased. So you now have a situation where 1% of the less than 1% of the world owns about 70% of the income. And so you're going to have some redistribution of income. But that's interesting. But the important thing is that, first of all, you've got to grow it before you distribute it. And we are seeing a growth rate of 3.1%, slightly higher than the population growth rate. But it's
and we're behind Ghana.
Yes, but and also, the sectors that are growing are not the ones that employ people. So even if you have growth, you may have high growth with high unemployment, which leads to income inequality. And there's data to show that the higher the income inequality, the higher the level of terrorism and risk and violence. So if you look at Mexico, even South Africa, you find that the income inequality is very high, but the level of crime, right, is high. Kidnapping, ransom, carjacking and all of that. So, and that's what we are seeing. And if you look at the sectors here, you'll find that the 57% of the economy is formal and 42% of the economy is informal. So there's formalization of the economy, right, which is happening, but there's also financialization of the economy. People are now putting money into financial assets. And you just had a discussion this morning about NIPS and people transfers 249 trillion naira in a quarter, right, of
transactions,
right? And that tells you something. That tells you the velocity of circulation of money, and that in spite of this tepid growth, in spite of this $240 billion, activities are beginning to expand. So that's the thing. But
all right, let's look at another thing that some Nigerians say has kind of made them poorer.
Yes.
At this point, buying PMS, and we did see Mr. Dangote there trying to make a case for stopping importation of PMS.
Yes.
At this point, so some would say it's kind of monopolistic.
No, far from it. you know what we call, you patronize domestic production before you internationalize imports. Because if not, you're creating jobs for others rather than creating jobs for yourself. Where I come from in Warri, they will say it's from inside the house you dress up to go outside. You don't dress up from outside to come into your house. So what they're saying clearly is that patronize Nigerian products. Then if there's a shortfall, you import, right? And so he didn't say ban imports, because whether you like it or not, this is the largest single train refinery in the world. There's nobody in the world that can produce refined products cheaper than what the Dangote refinery is producing, because of cost, location, and everything. So all it's saying is that, look, extend this Nigeria First policy, just like in the United States saying Make America, extend the Nigerian First policy to all segments. You can import if you want to import, but you will lose money, because the cost of production is one thing, the cost of transportation is the other, and then your margins and all those taxes. So I think like the media at times get ahead of themselves with what we call misguided enthusiasm and try to misrepresent the fact. The fact is that anybody who has invested $23 to $25 billion, remember that the Nigerian economy is $250 billion. $25 billion is 1% of the Nigerian economy, the GDP. One man or one group has invested this. And it's now time to say that that investment goes all the way, integrates forward, right, and captures, it's putting 4,000 trucks, right, CNG trucks, to ensure uniform pricing of petroleum products across the country. That's no mean feat. And this refinery and its complex is going to be listed on the Nigerian Stock Exchange. Can you imagine what it is if the Nigerian Stock Exchange is 85 trillion? This itself, right, will almost double the Nigerian stock
over
market
100 trillion.
Yes.
And more.
So, and that's just the beginning.
Well, we did get that story there and data that the U.S. has become a net exporter of oil to Nigeria.
Yes.
And this is on the back of the Dangote refinery.
Yes, because basically refineries blend, right? So Dangote is importing some crude from the United States, WTI and all of that. He's buying some crude domestically.
So that doesn't affect the business?
No, not at all.
Negatively?
No. You see, Rotterdam, in Holland, they don't produce any oil, but they buy crude from different places, blend it, refine it, and send it out. Basically, the world of refining is now hub-centered. In other words, you have Houston, you have Rotterdam, you have Singapore, and now you're going to have Lagos, where you'll be refining and covering the entire hub-and-spoke strategy. So remember that refining is a high-volume, low-margin business, right? And therefore, it is important that people realize that it's big, but there's nothing you can do about it. It's just you need that level of scale to be able to be efficient. So once you are efficient, your average cost of production comes down, and it is the difference between your average revenue and your average cost that gives you your margins. If not, you just have turnover. Turnover is what we call vanity. Profit is reality.
And where do you see this going? Do you think importation of PMS will stop?
I think it will stop. No, anybody who goes to import PMS now is actually suicidal, right? You just can't compete. But basically, don't forget there are modular refineries here. There's the government-owned refineries who are struggling, and then there's the Dangote refinery, which is already expanding from 650,000 to 700,000, all within a year of production. Normally, you don't go for expansion. You amortize your cost maybe first 5-10 years. Now, you're already talking about expanding your capacity within 1 year. Either we underestimated the demand, or something happened, something dramatic is happening. But don't forget that Nigeria's consumption is roughly about 65 million liters a day. Some say 75. I don't agree with that. I think 65. And therefore, the smuggling effect is going to be narrowed, because the price differential between the Nigerian market and the neighboring countries is beginning to narrow. And that, if you go back to what we're talking about, GDP and agriculture, and we'll come back to that when we talk about price of goods, there was export smuggling, people, yams, gari, and everything being exported to get foreign exchange from other countries. Now, because the exchange rate has stabilized, and you will now see that there's import smuggling. People are importing yams and rice to Nigeria to bring down prices, and that's an interesting phenomenon because the exchange rate is so critical, right? It's the fulcrum of all economic activity, which brings external sector and
I think we're getting used to this stability.
Oh, yes.
At this point. But do you think this would transcend into a strengthening?
Well, let's look at what's happened to the Naira.
Right.
If we look at, first and foremost, there's external balance. There'll be consistent, and the whole discussion today is what we call external uncertainties and domestic vulnerabilities. So we are beginning to see that, because inflation is tapering, because oil production is increasing, you can see Naira on a stable path. If you look here, you find between February 2029 and now highest periods of divergence, you can see that the dollar, Naira, the official and unofficial rate was wide. Look at what has happened. When we floated in Naira, right?
Got that big spike.
A big spike. Then the central bank intervened and sanitized the market. And now you have a period of stability. A lot of people do not understand this. This evidence-based analysis, this is not, you can't make it up. It's there. Today, the Naira is trading at about 1535 in the parallel market, 1533. The gap is 1 Naira. That gap used to be about 200 Naira, 300 Naira, 500 Naira, right? It's now 1 Naira. So it means that the misalignment of the currency is now aligned between the parallel market and the official market. What does that mean when you talk about what is fair value of the Naira? The fair value of the Naira today is about 1,200 Naira, right, to a dollar, while the official and this it's about 1535. There's a 300 Naira. So over a period, currencies gravitate towards their purchasing power parity, which now means that the Naira is 25% undervalued.
25% undervalued. Okay.
RENCAP says that it is overvalued because part of the proceeds that are being used to support the Naira are foreign portfolio investment, which are hot money and all. But foreign portfolio investors are not masochists. They come to a market because they can make some money. They enjoy, they carry trade, they do some things like that. But the benefit of undervaluation is that you can ride that curve, make some adjustments to your economy. And then when people see that there's stability, they begin to invest. So what are you seeing? The balance of trade is positive. The terms of trade is improving because our exports are getting more than our imports. We are seeing the exchange rate interest rate differential has narrowed. In other words, 5 years ago, treasury bills were earning 4% and inflation was 35%. Now, inflation is 23% using the new methodology, and treasury bills, or 1 year treasury bills, are about 18%. So that has narrowed, which means, technically speaking, that monies are coming in to Nigeria. So not only that, we are getting diaspora flows. We've issued some bonds, right? So and oil production has increased. So the fundamentals of the currency are getting slightly stronger. Will it fall off the cliff or something? I don't think so, because for that to happen, the price of oil has to drop below 60. But, in the world we're in today, anything is possible. Like what they say, what you see is what you get, and what you don't see is what gets you.
What gets you? That's a good place to anchor it at this point. Thank you so much, Mr. Bismarck Kurwani, for helping us, break all of this down and, get some kind of direction in this second half of 2025. Thank you for coming on today.
Thanks for having me.
All right, we'll take a break now. When we come back, we're also looking deeper into the rebased GDP for Q1. ICT's contribution, how did it grow? We'll check that out in a moment. Just stay with us.